This 1 minute pattern is the only one you need in order to become a profitable trader. And in this video, I'm going to show you exactly how to spot the pattern, when to take the trades, as well as showing you a live trade that I took yesterday. So without further ado, let's get into the video. So here on TradingView, you will see that we are looking at the 1 hour chart. Now, the reason I like to use the 1 hour chart is it's a real happy medium between a higher time frame and a lower time frame. And we're able to take trades based off each hourly candle close. So we use the hourly chart for our bias, and then we use a lower time frame like the 1 minute when we look for the pattern and we look for our entries. So if we just focus on the hourly chart here, and if we look at how many times a candle closes in a certain direction, whether it's bullish or bearish, and then the next hourly candle also closes the same way, and this is all we need in order to take a trade. So when we have a average size candle like this, we are able to utilize this and take a trade during the next hourly candle. So once we've reset the chart view, if we measure out from left to right, you can see that this has given us around 9 days worth of data. Now we can see that a lot of these candles are similar sizes, which is what we're looking for. Then we do have some bigger candles that are usually news inflicted. And what I look for is when we have an average size candle, I am looking to take a continuation trade. So I see how that candle is closed, whether it's bullish or bearish, and I am looking to take a trade in the same direction when the new hourly candle opens. Because if we look at it from an hourly perspective, we can mark out areas where price is pushed into and rejected from, or areas where price is pushed into and bounced. Now we don't want to get too caught up on this. The main point behind the strategy is if a candle closes bullish, we are looking for buys. If it closes bearish, we are looking for sells. The only thing to consider with this is if we are pushing into an area where price is rejected from previously, how likely are we to continue in that direction? Obviously it can happen. Price can just push through here, maybe do a retest and then continue up. However, a lot of the time, as we can see, price is pushing into these areas and rejecting and come back down to this support level here. Now, if I see price pushing into an area where it's rejected from previously, I may not take the buy. Or if we have a bearish candle into an area where we've bounced from previously and we've used that as support, I may not look for sells. However, when we are in between areas of support and resistance on the hourly chart, we are able to take continuation trades, provided we have an average range candle. Now, the reason it's important to look for average range candles as opposed to big candles is simply because if we look at this candle here, now this was probably news inflicted, it was Friday afternoon, but we can see that this is a huge bullish candle. Now, we are pushing into an area of rejection, so we're definitely not looking to buy here, but the fact that it's so big means that it pushed all the way up here. It actually pushed a bit further before rejecting, leaving this wick and closing here. But let's look at these previous bullish candles here. So this one is 13.8 pips. This one is 10 pips. And then this news inflicted candle here pushes 57 pips. Now, if we have a candle that big, we're obviously not looking to buy after that. Not just because we've pushed into an area of rejection, but price has opened here and buyers have pushed price all the way up here. Now, once this hourly candle closes, so we get the 2 till 3 candle, how likely is it that price is going to continue up? When we've had so much bullish momentum during this hour, eventually price has to exhaust. It's unlikely that buyers are going to continue to buy after this bullish candle. So that's why personally I stay away from candles that are too big and they've pushed too much on the hourly chart. And like I say, I also don't buy if we push into an area of rejection. So for instance, here we have this really nice bullish candle, but I can look left and I can see that we have rejected from this area. So how likely is it that price is going to continue up after this bullish candle close? Yes, we push up a little bit, but then we do reject. So that's just something that I consider from an hourly perspective. So I woke up at 6 a.m. and I got straight on the markets and I was looking at how the previous hourly candle has closed, which we can see it did close bearish. It's a nice size candle. We're not into any areas of rejection until I'd say around here. So I was able to get my 1 to 2 target before we got down to these areas where price is rejected from on the hourly chart. So that's important that I'm at least able to get break even before we come back down to these areas. So I was able to do that. So what happened is when the new hourly candle opened, so the 6 till 7 a.m. candle, I was just looking for a continuation of this bearish momentum. So we've got this bearish candle close here. The new hourly candle opens here at 6 a.m. just when I'm getting to the markets. Now, when I'm looking for an entry, I'm actually looking for price to start pushing up, even though we are looking to sell, because what we want to see is we want to see buyers have an opportunity to push price up. Price is making lower lows and lower highs, and this is what usually we trade those lower lows and lower highs. However, this isn't really giving buyers an opportunity to push price up. So if we are to enter at the break of any of these lows, there's potential that the bullish momentum hasn't stepped into the candle yet. So what we want to see is that the bullish momentum has tried to push this new 1 hour candle up. And that is what this wick is. So if we just delete this for a second, we can see on the hourly chart that we have this wick. That's where price is opened here at 6 o'clock. It's tried to push up. It's then failed. And then the candle is now flipping back into the direction of the previous hourly candle. So once the 6 till 7 candle opens, which is there, we want to see price doing this. We want to see higher highs and higher lows, showing that buyers are pushing this candle up. Now what's going to happen sometimes is price is just going to continue up like this, and we aren't going to get an opportunity to sell, because obviously sometimes candle closes one way, the next candle closes the same way, but it doesn't happen all the time. Now we are able to avoid getting into some bad trades, because if price does open here bearish and we are looking to sell, if price does continue up like this, we don't get an entry opportunity, because for us to enter the trade, the current hourly candle that we are trading has to be in line with how the previous hourly candle closed. So if price just continues up here, we can see that on the hourly chart, this candle would be green and there is no opportunity to sell. However, if buyers have tried to push price up, making these higher highs and higher lows, so in normal circumstances, what will happen is once we've made this high, price will come down to make a new higher low. It will then violate the previous higher high, make a new higher low, and continue bullish like that. So once we've made this high, we come back down to make this new higher low. If price is unable to continue back up and violate this previous high, and we now get a lower high, which is here, you can see it on the line chart a little bit clearer, here's the new lower high, then we are potentially able to get a sell just based on this lower high pattern. That's all the pattern is. There's no secret to it. If we are looking to sell, we are looking for a lower high. If we are looking to buy, we are looking for a higher low. So once we get this lower high, if we are then able to break this low that we've just created, then we are in line with how the previous hourly candle is closed. It's just showing that buyers have had an opportunity to push price up. They failed to do so. We are now bearish, just like we were in the previous hourly candle, where we had this average range of nice price actions, sellers pushing price down. We have this nice bearish body close here. So we want to be trading this first shift after price has tried to push up, failed. It's now broken the low. And then what we can see is on the hourly chart, when price breaks this low on the 1 minute, we are bearish on the current hourly candle. So price has opened here, tried to push up, failed. It's now lower than where it opened, therefore it's now bearish. So we are able to get into a trade based on the fact that the previous hourly candle is bearish. We've tried to push up on the 1 minute chart, failed. We're not in any areas of rejection on the hourly chart. We've also had an average size candle. It's not too big. It's a really nice size candle. We then break this low and price continues down for a 1 to 2. Now in terms of times, I trade from 6 a.m. until 8 a.m. So this is all UK time. I'll get up at 6, I'll trade the 6 a.m. hourly candle open, 7 a.m. hourly candle open. And if I don't get into any trades there, but I see a really nice setup at 8 a.m., I may potentially trade from 8 till 9, but that depends on how much volume's in the market. Usually I like to be involved with the 6 a.m. or the 7 a.m. candle. I then won't take any trades up until pre-New York, so 12 p.m. UK time. That is when I look for the 11 till 12 candle close, and I'm looking from the 12 till 1 if there's any trading opportunities. Then I'd look for the 1 till 2 p.m. and then potentially the 2 till 3 depending on news or again how much volume is in the markets. Now this just gives me clear structure at when I need to be at the charts, because what I find is the volume dies down a little bit between London and New York session, so there's no reason to be forcing trades then. Now for buy opportunities, it's the exact opposite. So on Wednesday from 2 till 3 we have this bullish candle close here. Not too big of a candle, not pushing into an area of rejection on the 1 hour. So after this 2 till 3 candle closes, when the 3 till 4 candle opens, we are looking for price to do the opposite of what we were for sells. So we want to see price start making lower lows and lower highs, which means that sellers have had an opportunity to push price down. If we are unable to violate this low and we come back up to make a new higher low, look on the line chart here, we should be able to see that a little bit clearer. Sometimes we do have these continuous bodies, but we can see the pattern through the bodies as well as using the line chart. So we make this low, we come back up to make a new higher low, giving us that shift that we are looking for from there to there. Now, if we are able to break the previous lower high that price has created, which we do there, you can see that we are bullish on the current hourly candle that we are trading. Set our stop loss below the low, and then that would have been another 1 to 2 trade. Now, what's important to me is I like to see when price has just flipped into our direction, I want to be part of the move all the way down here. Because what can happen sometimes is price may push all the way up here and we can start making higher highs, higher lows. We then start making lower lows and lower highs, and we get the shift of that new higher low. Now, we don't want to be taking trades all the way up here, because by the time we enter, if we look on the 1 hour candle, we'd be all the way up here. Now, what we can see is, based off the average range theory, price is only pushing a certain amount of pips per candle. So if we're looking to get into a trade all the way up here, price has potentially already pushed its range on the hourly chart. So we don't want to be taking buys because price has only pushed so far during the previous candles. So potentially price is going to reverse. So we want to be part of that move just as price is flipping. So we want to be low down into our candle and we want to be part of that move there. Now, in terms of trade management, I tend to go for a 1 to 2 most of the time. Now, this depends on the size of the stop loss. If we can definitely double our target based off, again, the previous average candles. So here, for instance, we've got a 5 pip stop loss, so we want price to push 10 pips. Now, if we can see clearly that by the time the candle flips, we are able to push at least 10 pips based off the previous candles, then we're able to go for at least a 1 to 2. This one, for instance, would have actually pushed for a 1 to 3. It all depends on how the previous candles have been closing. I tend to just go for a 1 to 2 though most of the time, and I personally like to go stop loss to break even at a 1.5 risk to reward. This is just personal choice. Obviously this depends on market conditions, depends on your risk tolerance. It's just something that I like to do personally. So I really hope that made sense, and I will see you in the next one.